All I gotta say is, what a year, what a year.
Wow! Wow, right? Can I just say, this is the best start to a year we've had in like ages. Okay, first the ringgit, right? It smashed through the 4.0 barrier to the dollar, and there's few signs of it stopping. And one of the main reasons, if not the main reason for this, is oil. Malaysia keeps on harping on about how oil is no longer the main revenue generator, but like it or not, our ringgit is totally attuned to its fluctuations. At current levels of $70 per barrel, highest in 3 years, that's one of the reasons why we're soaring so high. The other reason? Economic activity. Third quarter GDP came in at a staggering 6.2%, prompting even the World Bank to raise full-year forecast for Malaysia to over 5%. Now, recent data like industrial production numbers also back up this optimism. Problem is though, at 3.96 to the dollar, the ringgit has risen so fast that it's already hit end 2018 target levels. So the question is, can it go even higher? Or asked another way, can oil keep rising and can Malaysia keep growing? With oil, there are many data sets, but here are just two. First, OPEC. OPEC is perennially optimistic. It reckons oil demand and therefore prices will spike this year. And secondly, there's of course the young Saudi prince, Mohammed bin Salman, who wants his country rid of its dependence on oil via his Grand Vision 2030 plan. But for that he needs capital, lots of it, which means that his IPO of Saudi Aramco must go through. And that means oil prices need to go still higher, however he makes it happen. And on Malaysia's growth, so far so good, excellent numbers. GDP has been so strong that Bank Negara has basically told the market it will raise rates this year. And if it does, this is usually good for the ringgit, guided of course by how many hikes it actually does. So overall, the ringgit looks like it's in a good place right now. Now the stock market. For the first time in a long time, Bursa is up in January. In the past month alone, the KLCI is up 1.5%, which is a massive 18% annualized. Helped by the oil rally, related counters like UMW Oil and Gas and Hibiscus have been leading gains. And naturally, of course, speculative and related stocks like Sapporo Energy, Borneo Oil, Hua An have also been going gangbusters. But window dressing activities are now over and punters are now wondering, is it time for a breather? Or will this rally continue as Malaysia builds up to elections? Now, before going any further, some perspective. Bursa is not the only share market in cruise control. Most equity markets worldwide are up too. As of last Friday, the S&P 500, the Nasdaq, the Dow Jones, the Nikkei 225, they've all booked record highs multiple times in 2018 alone. But stock markets are notoriously fickle, driven as they are by fear and greed. Fund flows, as you know, are like the tide. 1 minute they're in, and the next minute they're out again. So one way to ensure the KLCI stays buoyant is to ensure earnings keep growing, because like the ringgit at current levels of 1830 points or so, the index is near its end 2018 consensus target of between 1860 and 1900 points. So unless earnings catch up, it looks like the KLCI has got limited room to grow. But all this has not stopped the conspiracy theorists coming out in full force on social media. They are saying the strong ringgit and stock market have been rigged because elections are coming, etc., etc., etc. But sorry lah, right? No one is big enough to rig oil prices or global fund flows. Maybe Uncle Sam can, but that's it, nobody else. So, elections. Held once every 5 years, and here we go again, which means no major deals or IPOs until elections are done and dusted. Now, my sources say this is the itinerary. Number 1, complete the delineation process. Number 2, obtain royal assents. Number 3, dissolve parliaments before Malaysians go to the polls in March when school holidays are held. Which begins on 16 March, in case you don't know. Now, my sources also tell me the establishment are running a don't vote campaign because they're afraid of what the younger guys or the younger sets might or might not do. And while various other polls even suggest that Tun M is still very much favoured as top dog, even with all the stuff he did when he was Prime Minister. But the way the stock markets are running, it looks like it's pricing in a Barisan Nasional shoe-in, which, whatever one's feelings about it, has traditionally been market-friendly. So in a nutshell, between now and elections, the party continues. After that, who knows? Just saying.
Hop out and roll.